think about the capex drive that the country seems to be in, and the quantum of requirement for industrial uh, and uh, and construction per se of maybe buildings or warehousing or roads. There is a long runway of growth slated from the looks of things, and everything that feeds into these critical areas would also potentially tend to benefit. Now, we thought that after the Q1 numbers of Honeywell Automation, that we get them to talk about, of course, what the quarter went by had in store for them, and what does it indicate maybe for quarter two and the year and the quarters ahead, but more so about the runway for growth as well, and how constructive they are, and what are the levers or the enablers for the same. In order to do that, Mr. Ashish Gaikwad is the MD of the company, Johnson, right now, to give us his thoughts. So, Mr. Gaikwad, great having you. Thanks for taking the time out.
Good morning. Thanks for having me.
And the pleasure is ours. I'll start off with the minutiae in the here and now, which is quarter one. Arguably, the street was disappointed with the operational performance, even as the revenue growth looked okay. So fill us in on both of those aspects. One, the 18% revenue growth, which I reckon is strong. But two, the operational miss, is it something that disappointed you as well, or is it transient?
Well, we are a business which is essentially looking at infrastructure as a area for us. And the second thing is the industrial automation, right? And in most of these businesses, we have what we call as the short cycle and the long cycle businesses. While the short cycle businesses turn the revenue quicker, the long cycle businesses turn the revenue over maybe even 18 to 24 months, right? So when you see such, sort of growth, that depends on the backlogs that we have created in the past, but also the quality of some of the projects which we have to execute in terms of margins come into picture. So when you look at the growth for the quarter, let's start with orders. And the good things first. Number one, we have upwards of 40% of growth when it comes to the orders, right? And then you also alluded to the revenue growth, which is in that range of about 18.5%, 19%. So that's pretty good. That means that we are building the backlog and not burning it as fast. So therefore, that is one parameter to be looked at. Our profitability also was kind of okay. Our PBT is about 15% thereabouts, and about 11% of PAT. So we are in the leading pack, I would say, in the similar sector. And our earnings per share also have increased quarter over quarter. So that's the good part of it. Now, the margin pressure that you are curious about. Number one, our domestic business is increasing, and there is growth in Indian market, as all of us know, and we would like to certainly participate in that growth. When we participate, we have multiple competitive pressures, and therefore the prices are certainly something that we have to watch. The second thing is, in the long cycle business that I described, when you book a project and you have to turn it over the next 18 to 24 months, if the input costs go up due to inflation, etc., our final prices are fixed. So therefore, there is a bit of a squeeze that happens. And the third point is, yes, there were some one-timers that acted upon the margin expectation there. So, that was the kind of summary of what happened in quarter one.
You reckon these pressures, some of it, if not all of them, would be transient in nature? And is there an internal average that you believe you would want to work with for FY24 as a year, or in general?
Well, it is in the same range of the margins that you see right now. We would probably be operating at, and of course, it's a function of the mix of the business. The business is fairly diversified in terms of ability to manage some of the mix. So our effort will be to manage that mix as well as it's possible. But however, I think rather than speculating, I would say this is the kind of margin performance that we expect.
Okay. Now let's shift gears. If I kind of look forward to FY24 as a year, uh, FY23 had a strong performance, the highest ever revenue growth notwithstanding, and that will probably happen every year going ahead. But a 16-17% revenue growth is a strong number. You reckon that it is possible to emulate that for FY24? And also part two of my question, therefore, looking at the possibilities around, let me get the number out of the way, then I'll come to the enablers. Do you reckon that this mid-teens to high-teens growth is something that you can do not just for FY24, but for the foreseeable future?
Well, again, I would not like to speculate. We don't want to make forward-looking statements generally for obvious reasons. But you can see the environment. There is a fair bit of manufacturing impetus that we see in the market. As a country, we need a lot of capacities that need to be built for energy sector. We need to have infrastructure, airports, hospitals, metro lines. So all of these are the sectors that we serve through Honeywell Automation India. And therefore, the environment that we are playing in is encouraging.
Yeah, I mean, so most certainly the environment is encouraging. I'm trying to understand, Mr. Gaikwad, that companies with your kind of pedigree, your kind of global experience and wherewithal would probably want to make the most out of this, because these periods don't usually come too often. I mean, you could almost argue that this is seemingly like a golden run coming back after a period of maybe 15, 16 years. So my question would be, do you reckon that there is a possibility? I'm not asking you for a guidance, but is there a possibility that you can, as a company, do even better than what the last 1 or 2 years have shown? Is there a possibility?
Well, so let's start with the basics. We are not looking at India as a short-term opportunity. We have been in existence in India for last 9 decades, right? So it's a long haul journey, and we almost are a Indian multinational, if I may use that word. So therefore, this is not about a short-term sprint. This is a marathon that we have run and we will continue to run, number one. Number two, we basically are building our infrastructure in India over this period of time, both in terms of our factory and the manufacturing capacity, but also in terms of the talent, the human capital, right? And so we will certainly want to leverage the GDP growth that India is offering in this particular decade, which you alluded to, and therefore make the most of it. But I don't want to just say that, this is only because of the window of opportunity that we see. We are here for a long haul, and we are committed to the Indian industry for automation, digitalization, cybersecurity, solutions for the sustainability, et cetera, which are the areas which are looking positive.
Okay, let me try and get a gauge of the sentiment around. What is it that excites you the most about within the various lengths or opportunity verticals that you are present in or want to be present in? Part one of my question. Part two, which of these have the best enablers already put in place by the government? And arguably, if the private sector follows, then that will only be the cherry on the cake.
Yeah, that's a pretty loaded question and a good one. So let me give you the high level and then I'll peel it for you. Number one, we are riding on the two mega trends that we see in the market. Number one is industrial automation and digitalization. And the number two is the sustainability part to fight the climate change, right? And so we are aligning all our efforts and products and solutions and services such that we are able to help the industry in these two large areas, right? Now, when it comes to industrial digitalization and automation, we are automating all the new sectors which are coming up in India, like the new need, security, lighting, access control, various other building controls, climate controls, all of that. when it comes to metro stations, when it comes to hospitals and large facilities like the commercial buildings. And so that is one big part which we participate. The second part is about the industrial digitalization and automation. We are playing in the field of automation for oil and gas, refining, petrochemicals, fertilizers, minerals, metals, and mining, power plants, so on and so forth, right? So again, something where the capacities are being added, and therefore we have a play in providing automation and digitalization. The digitalization part, when you see, it's mainly to sort of take advantage of the technologies that we have as Honeywell, and Industry 4.0, or people call it as IIoT, is a big part of that growth. Secondly, we play in the supply chain resiliency as well as supply chain efficiency part. The third is about the worker efficiency. All of these workers that are required to run industry efficiently need digitalization for efficient working. Then, of course, big assets are deployed in terms of the production in these facilities. So the asset utilization and upkeep of those assets is a big part of what we do. And when you do all of this, as the digitalization and acceleration of such solutions, there is a constant threat of cybersecurity, that needs to be deployed for cyber threats that are looming large. And so we have very special offerings to protect the industrial digitalization, giving the industrial cybersecurity solution. So we see that as a big part as far as the digitalization and automation is concerned. The second part is sustainability, and there is a significant excitement about that in all the industries. We essentially play in the areas where we augment and help the sustainability initiatives that are being taken by the industry. First and foremost is you hear about so much of solar and wind power which is coming up, and the capacity is being built in India. Now, when the sun is not shining or when the wind is not blowing, you still need power because you need continuous 24/7 power supply. And what we therefore are able to offer is something called as battery energy storage systems, which are juxtaposed to these plants, so that when you don't have the production of the solar, you can still augment it by the battery power energy. So that is one area. The second area is the electrolyzers, and they need automation. So we provide automation to the electrolyzers. The third area is the new fuels that are coming up, either the biofuels or the ethanol. So the ethanol plants which are getting constructed, we have automation solutions that can make those plants efficient, and they can produce good yield from those ethanol plants. We also have sensors that go into the EV vehicles to manage the battery temperatures, and therefore to provide the battery safety systems in those areas. We certainly also play in the gas distribution, gas transmission, city gas distribution area, which is again a fuel that is getting increasingly used for lesser emissions. So there is a whole host of sustainability solutions. And of course, I forgot to mention to you, buildings are one of the large polluters of the environment, and we provide sustainability solutions, especially to manage energy and to optimize the energy usage in the large commercial buildings, airports, metro stations, etc., so that we can keep an eye on those emissions. So I think there is a whole host of these solutions that we are excited about in the Indian market.
Okay, there's a wide buffet out there. Trying to think of the upcoming areas. Just a quick comment there. A lot of optimism around green hydrogen, or optimism around data centers. Any solutions there from your end?
Absolutely, in both the sectors, in terms of hydrogen and the hydrogen economy that is developing, and also in terms of the data centers that you talked, because data centers is aligned to the digitalization that we spoke about, and the hydrogen is aligned to the sustainability we talked about, right? So for data centers, we have solutions that will reduce the energy consumption and therefore optimize the energy usage in these large energy guzzling infrastructures. And without getting into the details, Honeywell has a very good portfolio of products, solutions, services that can keep it going for a long period of time. On the hydrogen side, when it comes to the electrolyzers, we have the programmable logic controllers, which is the kind of electronics that goes into operating the electrolyzers. So that's an area that we are absolutely plugged into. And then when you have to transport or handle hydrogen, which is a little bit of a hazardous gas in terms of its movement, we provide safety and automation that goes with it. So again, a very nice area for us to look forward to.
Got it. Mr. Gaikwad, one quick question, and don't take offense, but I'm just saying there's a lot of areas. You would be the first amongst many equals in some, and competing with some of the others in some. Where is it that you have an automatic right to win by virtue of the experience, market leadership, so on and so forth, within all of these that you spoke about?
Well, essentially, we are a technology company, and we continuously invent and innovate the technology, right? And that's exactly how Honeywell globally has not only survived but thrived for last 130 plus years. That's the secret sauce, that we reinvent ourselves every decade or so. And so the next decade and maybe a couple of decades will be on this industrial digitalization, cybersecurity, automation, and the sustainability solutions. And we will continue to play our part. We actually like the competition rather than being just a lone ranger. That's because that's what pushes us for better technologies. That's what gives us the ability to innovate. And we are not shy of any competition at all. And I don't believe we have any kind of specific area where only we will play. There are others who can also play. But we do believe, because of our presence in India, both in terms of our manufacturing presence, our people, and our facilities spread across the country, we leverage that quite a lot to drive the business.
When I was speaking to your global CEO at Davos earlier this year, there was this large belief around aerospace really doing well and opening up meaningfully in India. And I think that pocket hasn't quite disappointed, if you will, with the pace of growth that people envisaged it to do. You guys are big in that. How do you believe that pocket will do in terms of growth for Honeywell India? Part one of my question. Part two of my question, when I see across pockets, the share of domestic to exports for Honeywell Automation India has moved much higher in terms in proportion towards the exporting side as well. Do you reckon that trend continues?
Yeah, so the first question that you asked about aerospace and defense, this is, Neeraj, actually outside the purview and my responsibilities as the managing director of Honeywell Automation. Yeah, not a problem, but I just wanted to clarify, because that's something which I'm not knowledgeable about, so therefore making any statement will be incorrect. The second part is an important question. So yes, since the inception of Honeywell Automation India Limited in 2005, where the ratio of the exports to the domestic market was in the range of 20 to 80, right? So 20% was the exports and 80% was the domestic market. From there to, if you see the last year, we have got that ratio to about 60% domestic, roughly, and about 40% exports. Right, so we are continuously trying to look for opportunities. We have diversified our services across the globe in multiple countries, so that gives us a kind of a good mix, and therefore we can hedge it properly. Last year, if revenues that came from the exports services business and products as well in the range of about 1,400 plus crores. But when you look at the market right now between exports and domestic, exports is steady, but domestic is growing, and everyone's talking about India growth, GDP growing at a certain rate, etc. And therefore, we do want to participate keenly into this entire growth happening in India to create our footprint, to create our installed base, which we can then go back and continue to give life cycle services for a long time to come. So that's how I see, we managing the mix between the exports and the domestic.
Got it. Just before we wrap up, Mr. Gaikwad, and I'm sure as we talk over the quarters, I'll have more and more conversations with you about some of the details of the many things that you do. But as a broad brush, would you be the most optimistic about the forthcoming 5-year period, if you will, because I believe companies think long term, much longer than even 5 years, but I'm talking about 5 years because from an investing perspective, that's really long term, so to say. So would it be fair to say, or I'm actually not trying to put words in your mouth, I'm trying to assess that would you be as constructive or the most constructive of the next 5 years currently as you would have ever been in the last 10, 15?
So we've been always cautiously optimistic throughout. One of the things that we have at Honeywell Automation India is we are, prepared for good times as well as challenging times. Who would have thought of the pandemic? Who would have thought of the geopolitical situation that arose in Europe, right? Nobody could even prepare for it when the things were looking hunky-dory. And so as a management practice, we would like to continue to be cautiously optimistic about it. And yes, I talked to you about all the different subsectors where we play, both in terms of industrial digitalization and sustainability. So it really gives a good outlook for these many years, the decade that you talked about, and the 5 years within that. And we would certainly like to convert that excitement to efforts and take what it takes to participate and make the most out of it.
And we wish you all the best for that. Thank you so much for taking the time out and speaking to us about Q1, that little bit, and about how you think the piece will move up ahead. Lovely talking to you today.
Thank you very much. I appreciate it.
And the pleasure was ours. And viewers, thanks for tuning in this conversation with Honeywell Automation.